Risk management topics, fraud monitoring. Hey everybody, arm your phasers for phase 2 of the new fraud monitoring rules. These new rules to monitor fraud, they're going to kick in on June 19th, 2026. And they are part of Nacha's, let's say, new big plan to help cut down on fraud and to help recover funds when fraud does happen. Here's the scoop. Well, here's a way to be able to learn some of this. And let's maybe have a little fun along the way. What do you think? First thing you're probably asking, it's the first thing I always ask, what's these new rules? Wait, what's changing? What's going to be different? Well, fraud monitoring by originators, third-party service providers, and ODFIs. This again is going to be effective on June 19th, 2026, and it will apply to all non-consumer originators, businesses, third-party service providers, third-party senders that weren't in phase 1. So if you weren't in phase 1 when it went into effect in March, you're definitely going to have to be ready when it comes to phase 2 in June of 2026. So what's happening? Well, this rule means that every non-consumer originator, business, third-party service provider, third-party sender must set up risk-based processes to spot fraudulent ACH entries. Think of it like installing security cameras to monitor all activity as it's happening and catch any thieves while they're in action. What are the actual benefits of it? It's to help catch more fraud. It's to help actually reduce the successful fraud attempts. We want to reduce and remove as much as possible. It's to help spot the odd ones out. That's regular monitoring to help identify unusual activities by establishing, well, what's normal, setting a benchmark. You may be wondering though, are there any current requirements that I need to be, in line with now before the new rule goes in place? Well, right now, as an originator, you must be using fraud detection systems if you're doing online debits, or web SEC code debits, and if you're doing micro entries. These new rules are actually expanding fraud monitoring to, well, really all other types of transactions that are in the ACH world. Were there any changes from the original proposal that maybe we should be aware of? Actually, yes, and I would call this one, out with the old, in with the processes and procedures. What? There's no more commercially reasonable standard. Now it's all about processes and procedures. And then let's take it to the next level. What we see in this change is the description of requirements for reasonably intended to identify. So you've got to do what you can to reasonably identify these things. You want to be taking a tailored approach. This means that the requirement is to be able to fit the role of who you are within the industry that is appropriate. And consider what others are doing. ODFIs, you can look at other participants' fraud monitoring steps and mimic them as much as possible where appropriate. And no pre-processing needed. What that means is monitoring isn't required before transactions are processed. You do have to monitor, and I would recommend actually monitoring before processing, but you don't have to before processing. And make sure you're getting that annual checkup. See, processes and procedures, they're going to be required to be reviewed at least once a year. What about the ACH credit monitoring by RDFIs? Now, this is also in phase 2, effective June 19, 2026, but this is for all RDFIs. It's like a pirate. RDFIs. Well, what's happening? As an RDFI, you will have to implement risk-based processes to also identify suspicious credit entries. It's like having, again, a radar detection system for incoming fraud on credits. What are the benefits? Of course, it's to reduce fraud, and it's help to cut down on the successful fraud attempts. It will also improve the recovery of funds because it will enhance the ability to be able to recover funds if you're able to detect the fraud before it's been handed over to one of the fraudsters. These new rules are really ways to beef up your security system. Yeah, we need a good, strong security system. They're going to ensure everyone from originators all the way through to RDFIs have the right tools and processes in place to spot and stop fraud before it happens. And those regular checkups, making a tailored approach what fits you and your institution, that aim to make the ACH network safer and more secure for everyone. For now, class dismissed.